In this video, we're going to do a recap of this past week's trades and the weekly recap. Before I get started in the recap, I just want to say I did finish the week with 22 wins, 3 losses for a win rate of 88% for the week. I met my 80% weekly goal, which was very happy about. 9 out of those 22 wins were greater than 100%. I think I only had like 100%, most were 200% plus. So that is really good to see that a majority of my wins were big movers. So yeah, that was it was definitely a good week. You can go on Twitter. You can see the timestamps of the alerts. That's why I post them on Twitter every day, so that way people can see the timestamps of the calls, and I'm not posting them after the fact. They're in real time. And if you're in the room, if you're not in the room, the link is in the description of the video and on the bio section of the social media. But once you're a member in the room, I try to post the play before it happens, because some people always miss the play and they say moves too fast, because I just very precise and wait for the right moment to strike before getting in. So I always like to post in the room, okay, I'm looking at such and such for this. So and I usually give advance notice of a play before it happens if I can. Sometimes things just happen, like a news event or that just surprises you, which you can't pretty much predict. But I'm pretty good at seeing opportunities before they happen and posting them and giving that little warning so people can have the ability to jump in and catch the play and sometimes get in before me. And so that's what I do like to see, and I think that helps a lot of people out to be able to get that early jump on the plays before I do sometimes. So yeah, with that said, I'll get into the trades for the week now. The first one I had was Facebook. Now Facebook on Monday, I got 275 puts at $1.10 at 9:36. Now Facebook had a blow it up just a little bit. Facebook had this insane run right here on Friday, and it just chopped. I remember that I had, I think I had puts on this that just ended up not working out. I can't remember what last week's, last Friday, not yesterday, but the week before's Friday. I can't remember what I had. I think I had puts right here. But anyways, you see this big disconnection between the action and the 200 moving average and the ICT trend line right here. Anytime you have these strong days, because it went from 281 to went $12 and $11, so $12 right here. So whenever you have these big runs right here, they usually end up dumping the next day, or sometimes the end of that day. So that's why I was watching for Facebook at open on Friday. I grabbed it. I grabbed the 275 puts at $1.10, and they went to $1.19, $1.29 right here. Not a big mover right off the bat. It just dropped quickly and reversed. And then I should have grabbed it right here, but I didn't. So that was the only play I had on Facebook on on Monday. Then I had the next play was Visa. Now Visa, I was watching. Now what's just Monday right here? Now I was watching Visa because I had this nasty drop right here on Friday, and it dropped more at the end of the day. So I was looking at it. Okay, if it does manage to get over this 208 level, that is probably going to end up taking off. I grabbed it at 957, which I believe is right here. Actually, yeah, I was looking at this level right here. This is where I should have took it right there, but I didn't. I took it right here. I was waiting for the 210 to break or get close to 210, and they just didn't really. I remember trading this thinking, okay, it went from 210 to 212, and the calls did not move. I remember watching it going up, and the calls were creeping and creeping and creeping, and that was very annoying to watch it. And I know I had the 217.50 calls. I mean, they're out of the money, but still, on a Monday, they should have gone up more than 17 cents. But that was very annoying to watch, and so I just was like, okay, whatever. So I moved on to the next one, which was SBX, which was my first loss for the week. I remember I only had 3 losses, and 2 of them were on Friday. Where are you? Right here. Now I grabbed SPX at 11.15 at $1.03. Right here. Yeah, see, this is what I'm talking about. I always say in the video, I can just, when I look at the play, I don't even have to look at the timestamp. I can look right at the chart and say, okay, this is where I can see where I got it right here. But sometimes I get those plays. I'm just like, okay, I have to look at the timestamp and say, okay, why did I get it here? But yeah, here I definitely see why, because it ran, it broke out, it went up to the 200 moving average, chopped on it, decided to break right here. So I thought it was going to fall through and dump, and it didn't. It just popped. So that did not work out, and I had the at that point in time I had the 39.10 puts at $1.30. And trading at that particular time. Also, we'll round up to 39.35. So you're talking 25 points out of the money on SPX. I mean, that is very, very, very cheap for SPX at 11 o'clock in the morning on expiration day. Usually, they're usually right around $2 or $3 at that point. About $3 if it's only 20 points out of the money. So I saw how cheap it was, and sometimes that's when puts or calls are very cheap, like last Friday, like yesterday, put calls were extremely cheap going into close, and we all saw how that happened. But yeah, whenever time you see an imbalance of price between the puts and calls, if the one side's a lot cheaper than the other, it's going to end up probably more or less going in that direction. And at this point in time, calls were more expensive and puts were very cheap, and I thought for sure that was going to be the telltale going behind underneath the 200 moving average that it was going to dump, but it didn't, so whatever. Then I ended up grabbing SPY puts. Let's see, get the right day here, 23rd, 22nd. Now I was not expecting SPY to take off like it did on I'll just blow up this section right here. I was not expecting SPY to have this big of a run on Monday. Yeah, Monday. So I grabbed the 394 puts at $1.17 at 1 o'clock, which is probably right here. Yeah, right here. Came up, wicked a little bit, and as soon as it broke this previous candle right here, that's right where I grabbed it. On the bearish engulfing, they went from $1.17 to $1.41 in that little push, because I bought in the money calls. I do this on expiration day, because sometimes if you bought, like here, when you buy SPX and it chops like this, it just it gets annihilated, especially midday. So buying at 1 o'clock is pretty much midday, and I didn't want to buy 393 puts, because in case it chopped and it's at the money, it could still get smashed quite a bit. So buying 394 puts deep in the money, I shouldn't say deep, but in the money, that if it did chop, it would hold a lot more of its value than a 393 put. So I've been deciding to go that route. If the prices for premium are cheap in the money midday, I will do that. So at that point in time, the put side was cheap. So I grabbed those and went from 117 to 141 in that little dip right there. Then I ended up grabbing them again at 213 at 81 cents, which would be right here. 213, yeah, right in here somewhere I grabbed it. Probably right here, right when it broke below this candle. It's just diverging, as you can see. I'll back it out just a little bit. As you can see right here, it's going up, and histogram is going down, and in the red right here at this particular time as it's chugging higher. So I grabbed the 394 puts again. At this point in time, it's right at 393.40. Let's just say 393.40, and it's still in the money ones. And I got them at 81 cents, which is really cheap in my opinion. Then it popped a little bit, then it dropped. So they went from 81 cents to $1.60. So that worked out pretty good. Not a big day. One loss and some small wins on Monday. So Tuesday, I had some synthetic stocks that I had been swinging. One of them was DLTR. Now DLTR went from I got it $4.15 and I sold them at $15.70. So that was a 200% move. Now I had DLTR. I got 10 minutes on both time frames. I don't know why I didn't even notice that. Okay. I bought DLTR 95 calls, 95 puts. Now a combo is a synthetic stock. Basically you're buying 100 shares or if one contract, if it's synthetic stock, is 100 shares. So you're basically buying stock and the options. And I really like using the combo strategy because it's you don't have to worry about theta, and it just you whatever if the stock moves, you're gonna make that money. It's like having 100 shares of the actual stock for a third of the price, and I really like that. Spreads, no theta on the spreads, but if I had a choice between combos and spreads, I'd take a combo every time. So I'll be playing a lot more combos because I just like them. But anyways, ranting aside, I did grab the 95 calls and puts at 4:15 on February 26th, which is which date? 26th. Okay, I might have to go out this so you can see where I got it. February 26th. Right here is where I grabbed it. Right there. Apparently I had it during earnings. I didn't even know that. No, whatever. Because when I put these in my portfolio account, I don't even look at it. My portfolio account is something I never look at, and I don't like micromanaging things in there because I'm not going to panic sell over something, especially when you have combos or actual shares. You just let it ride out. So yeah, I got it back here at 226. As you can see, at that point in time, it was under $100, and I sold it on what day? The 23rd, right here. So I got $11 point on that, so that worked out pretty good. Now on the daily, it was right here, right there is where I got it. If you look at it on the daily's perspective, right underneath the 200 moving average. Wasn't even watching it through this pop right here. I totally forgot about it. Then when I looked and I heard DLTR on the scanner, I think it was on Monday, I ended up looking at it at the end of the day, and I was like, "Oh, whoa, this is up quite a bit. I need to get rid of this." And plus, it's entering heavy resistance in the 112 area, so that's a good area to take it off and get ready for maybe another possible re-entry on that. So then I ended up grabbing the other synthetic stock I had. I had Lululemon, LULU. I had the 310 calls, 310 puts. I bought at $7.15 and I sold at $11.20. Both expirations on DLTR were January 21st, 2022. I always like to go for the long expirations in synthetic because theta, like I said, does not matter. There's no theta on combos or spreads. So I always like to take the furthest expiration date on those, so it has some time. I grabbed Lululemon at 223. I'm probably gonna have to go back out to the daily so you can see it. 223. 223. Where is it? I hope it's not right in here. Right here is where I grabbed it. And as you can see, I did a horrible job because I got it right here. Oh, wrong chart. Now I could see it. There we go. 223. Right here is where I grabbed it. 223 right there. Wait. 223, February 23rd. Yeah, right there is where I grabbed it. I grabbed it, Yeah, that's where I grabbed it, right here. For some reason, it just doesn't look right. Let me bring it down to the 4 hours, see if I can see it better. Oh, yeah, right in here. I probably grabbed it down here in the low 305s. I don't see the timestamps, but anyways, yeah, I grabbed them at 7:15, and they went up $3. So $3. Actually $4. So if I got it at 305, I had to sell it over at 311. So, which was this day right here. Yeah, I sold it here. Yeah, the 320. When I got up into the 320 areas where I ended up selling it. Yeah, then I end up buying it down here again, which I'll get to in a little bit. But yeah, I sold it right here. I had it here, the 305-ish area. Then I ended up selling it into this 320 pop. So that was a nice little swing on Lululemon. Now, what else did I play on Friday? Let's see. I played Facebook puts. Gotta make sure I have the right tickers up, or I'm gonna end up being confused. Facebook puts. What time did I grab them? 9:45 on the 23rd. Okay, 9:45 on the 23rd. Right here, right when it broke down, right in here. You can see it just made its big run. It did dump a little, and it kind of held, and it had this fake out. I mean, one of the things I've been trying to do this past week, which has been helping quite a bit with my winning percentage, is staying out the first 20 minutes plus. Usually I wait the first 10 minutes, but what's been happening is that you get these massive drop and pops where like it will draw, then it will just rocket on the next candle. So I've been waiting for at least the first couple candles to form, and I did grab it right in here. I grabbed the 280 puts at $1 and then went to $1.25 in this little push. Then as you can see, it just rocketed. Then I ended up grabbing, I played SPY a few times on Tuesday. Let's see what the timestamps are. I played 390 puts at 10:32. Now, as you can see, SPY topped out right here on Monday, and it's rejecting this 390, 350-ish area, you can say. I got it right here at 10:32, right here, right in that drop. I remember I chased this candle. As soon as I saw this red candle, I was already looking at it, and I kind of, when it had this bigger red candle right here, that I ended up chasing it. So I got the 390 puts at 70 cents, and they went to $1.12. I chased it. I think I got it a little closer down here. Then I ended up grabbing SPY puts again, the 391s this time at 11:39, which is right here. Another big red candle. As you can see, it's just been having this strong volatile moves right here. This big red candle, it went from a 392.74 to, I mean, almost $1.30 right there in one candle, and it reversed quickly, and then right when it started to made a new higher high. But yeah, as you can see in the histogram, it was making a lower high, so it was diverging. I was keeping an eye on that. Right when it got below right here, I grabbed it again. I grabbed the 391s this time at 79 cents, and they went from 79 cents to 96 in this little drop right here. As you can see, you got it, and it came back up, and then it finally dropped again. It chopped on VWAP right here. Then it tried to pop up again. It started to reject, and the last SPY play was at 238, which is right. I didn't grab this one for some reason. Right here, 238, right here. I grabbed it right in here. As you can see, it dropped quite a bit, and it's flagging right here. A nice little bear flag right there. You see the line there and a line there, and it broke right in here. 390 puts at 80 cents. They went from 80 cents to $2.18 right there. So that was a nice 100% move. So that played out really well on SPY. So no losses on Tuesday. Let's see, Wednesday I had Disney. Okay, where's Wednesday? The 24th. And Disney's just been bleeding and bleeding and bleeding every day. As you can see on the hourly, it pops a little bit and just drops. It pops and drops. It's dropped here and here, there. So I grabbed the 185 puts at 74 cents at 940 right here when it broke right below here. 949. So I grabbed it right in here on this candle. They went from 74 cents to $1.58. If you held all the way through. So that was a nice strong move. I probably should have grabbed it right here, but I think the reason why I didn't grab it is because it's I waited for the second candle, 10-minute candle to form before, because of the fake outs. It's just been ridiculous the past couple of weeks, and I didn't want to get trapped. And I ended up grabbing SPY puts 2 at 390. 390 puts. Let's see. 24th. As you can see, SPY is rejecting this area. It was chopping it the day before. I grabbed them at looks like right around 950 at the same time. They went from 74 cents to 93. I think I grabbed them right here. Just that quick little drop. Nothing special right there. Not even a 20-cent move. It was a 19-cent move. So yeah, SPY was just a little choppy that day. Then I ended up grabbing 38.95 puts at $1.05 on SPX. I'll keep SPY up. I mean, I'll switch it over to SPX so you can see it. It's me, SPY and SPX chart's the same. It's just no aftermarket. Let's see. Make sure I get the right date. Now, I got SPX at 143, which should have been, God, it's a little too close. 143, which is probably right here. No, right here. 143. Right here. I don't know why I bought it here, but I did. 143. For some reason I got it here. I should have gotten it here, or I should have got it here. But for some reason I got it here. I don't know why. Yeah, this is one of those moments I was saying at the earlier the video. I should be able to tell it without looking at the timestamp exactly at the chart where I got it. For some reason I got it here and I have no idea why. Very puzzling, but it might have been because it broke right here very quickly. I bet you that's what it was. I bet you if I went and go into a smaller time frame that it broke underneath these candles right here and I got it right here and it just rocketed up on me. Yeah, yeah, that's what I did. I can see that's what I did. I'll break it down to a 3-minute. I guarantee you that's what I did. This must be the 24th, right? Yeah, look, yeah, right here. Broke down. Big red candle. Broke below these candles right here. And then just recovered. So that's exactly what I did on that. Bring it back up the 24th. Yeah, so it's so difficult to, it gets too close, it kind of, I don't like it. There we go. So yeah, they popped back up, then it finally dropped. So they went to $1.19. I mean $1.90 from 105. Let's see. Yeah, right here. They come back down. For some reason that they we got the right day, yeah. Anyways, those 38.95 puts $1.05 to $1.90. If I remember correctly, I think when this was going up, I think I remember that the puts were actually increasing in value as the SPX was going up quite a bit. Not quite a bit, just a little bit. Then when it finally dropped, it did go to 190. So I took the 190 in here. So from 105 to 190 was a quick little play. So sometimes it's just how it is when IV starts picking up, and implied volatility was definitely picking up. That's how I was able to get from 105 to 190 in the same area. So it does happen sometimes, and usually I'm on the wrong side of it. For once, I was actually on the right side of that, of the implied volatility, so that worked out really well. Then I ended up grabbing 390 puts at an SPX at 258, which is right 258 right here. For some reason, when it started, it looked like it was going to recover, and then it started to come back down really quickly. So I probably ended up gotten out right here when it broke down below these areas, and it quickly rocketed up, and then it came back down really quickly. Usually when they try to recover and get rejected really fast, so the next candle ends up collapsing more. So I ended up grabbing the 390 puts again at 258, which is right here, right in here, and then it chopped a little bit, but they went from $1.40 to $8. I mean, you got to look at it from the point of view that 390, the 3,900 puts are only $11 out of the money, I should say, and this doesn't look like a very big move, but when SPX is at the money, only $10 away, and it has a nice little slam like this, I mean, that can end up being a 500% move, no problem, which it was a 450% move. But it doesn't take much. It's all it takes, especially on SPX at the money, 10 points out. That ends up being a strong move, and it was a very, very strong move on SPX. Now we're going on to Thursday. First trade today was 389 calls on SPY. We blow it up. Now SPY, you had a bear flag right here. It would collapse to the bear flag, and it started to round out. So I did grab 389 calls at 81 cents. I grabbed it at 937. I grabbed it right here in this candle, and it looked like it was starting to get ready to pop right here. That it quickly dropped and then popped. I mean, this is why I like to wait the first 10 minutes, 20 minutes, because of that. Because it looks like it's going to break out, then it drops really quickly, but then it actually did. So those 389 calls, they go from 81 cents to $1. As soon as they turned green and got over my thing, my buy-in, I got out as quick as I could, because I just didn't like the way it did that. And I'd been pretty good not getting trapped like that all week, and that just didn't settle very well. Then I ended up grabbing BA calls. Now I remember this. I grabbed BA calls at 1025, which was right here. Now it looked like it was getting ready to break out, and it got slammed. And I held on to them because I kept looking at this. The RCT trend line is way up here. Whenever you see a huge difference between the RCT trend line and the price action, that's when it ends up acting like a magnet. As you can see right here, I can show you this all day long. I mean, look what it did up here. It ran away from it, then it came back down and tested it right here a few days later. So anytime you see that, or if it's down here, it's a magnet. You got to look at the direction of the regression channel trend line. If it's pointing up, it's obviously in a bullish channel, and it likes to chop within the channel. So I keep an eye on that. And plus, on this day, I went down to the hourly and hit the 200 midday moving average, and just why I was interested right here, because it touched the 200 EMA on the 1 hour. So I thought for sure this was going to break out, make a major run. And it didn't. It collapsed right here. I held on to it. I think at this point in time, they were worth I think 15 cents, not even. They were pretty much worthless. And then it just rebounded quite a bit. Then the BA dropped news about something. I don't remember what it was. And then BA just took off. So they went from 57 cents to $1.90. So that was a 200% move. And I went back into SPY. Let's see. I Grab SPY puts at 10:36 on the 25th. 10:36. 10:36 right here. Right when it pushed down below VWAP. You know, as you can see, we had it here. Rejected this white line, which is the 37 EMA, and we pushed through VWAP. And boom, I grabbed it right there. And they grabbed the 382 puts at 79 cents. And they went to $1.48 right there in that little push, almost to, technically that's actually 100%. No, 100% would be 80 cents, $1.60. No, that's not 100%. It's almost 100%, $1.48. Then I ended up grabbing SPY puts again. I grabbed them at 104 right here. For some reason I grabbed it right there. 83 cents, and it just chopped and chopped and chopped, and then it finally dropped and went to $1 on that. So nothing big right there. So that was pretty much it for SPY on Thursday. Now I ended up trading another synthetic stock. I grabbed LULU when it went under 300 on Thursday. To me, LULU under $300, I'll grab it every time. I grabbed it at let's see if it shows a timestamp, 10:57 on Thursday. So it was right here. I got it right under 300. Had an order waiting, got it, and I sold it on Friday. I sold it right at open. I got it at $5 and I sold it at 11. I shouldn't have. I mean, if I held it right here, I got it at 5. Let's just say I got it at 300, and if I held it to here, I would have gotten would have been able to sell it for 17, so instead of 11. So I just didn't want to. For some reason, I thought that Friday was going to be a dump day, even though the put to call ratio was the put ratio was high, and usually when put ratio is high, there's a big squeeze. But for some reason, I just I was thinking there was gonna be a pop and drop day on Friday, and it didn't. Well, it kind of like, oh, that's Lululemon. I can't judge that, but yeah, that's what happened on Lululemon. Now SPY, it chopped a little bit before it took off, so it stayed within a range for a little bit. Now, what was the first one on Friday? I grabbed Disney puts. I grabbed Disney at 9:42. Let's switch to Disney. Let's see. Disney had its strong move. Like, see what I was talking about? I got disconnected from RCT trend line right here, and it just popped up and got sucked up to it like a magnet. Then I got to it, got away from it just a little bit, and then it just collapsed. The 185 puts, we grabbed at open 942. Just blow it up, 942 right here. And it went up a little bit, then it just made its little flag, then it just dumped all day long. So you held all the way through. The 45 cents went to $2.31. I know many in the room held right to the bitter end. So congrats to many of them that did that. That was a nice solid play. Then I had Tesla. Tesla, I had puts. I had 2 losses on Friday. So this one, the 615 puts, I grabbed on Tesla at 1110, which is right here. No, right here. For some reason. I was actually looking at it right there, and I almost did grab it right there. I was like, I don't know, but I did grab it here. When it went up here and rejected VWAP and the EMAs, I quickly grabbed it. 127 was the price I grabbed it at, and they went from 127 to 1535. They went deep in the money. Tesla went all the way down to, what was the low of this candle? 599.89. So it went under 600 for a split second. So yep. So that was a 1100% move on that. They went deep inside the money. That was crazy. Then I ended up trying to get the bounce for a dead cat bounce. I grabbed the 640 calls at 12 o'clock. I tried to catch a bounce right here at 12, right here. I grabbed it, but actually I grabbed it more this upper end, because if I grabbed it down here, they would have gone some, but they didn't. I grabbed it right in here, right in here, and then it had this massive drop. Because I remember when I grabbed it, it had that big drop right there that it started to rebound. It's like, okay, it's going to finally rebound and have that dead cat bounce to the VWAP or something. And if it got over I was saying in the room, if I got over this 620 area, it would squeeze, and it got to 620 and just kind of like made a bear pennant right there. Then it just dropped more. So that was one loss on Tesla. I just didn't get that right. I would have got it if I got it down here, but it is what it is. I was looking at it from the point of view, it went from 645 to it made a 30 point drop that I was thinking at least a fairly decent dead cat bounce to VWAP or something, but it didn't quite get that. I mistimed it, but oh well, it is what it is. Then I had SPY puts. Let's see, SPY puts. On this one I got correct. I got 393 puts at 90 cents. And I got them at 10.12.57, which should be right here. 12.57. Right here is where I grabbed it. Let me blow it up. I grabbed it right here. It had this big engulfing. That's why I grabbed it, and it chopped a little bit. Then it finally dropped. So they went from 390 to 275, and that was a 200% move on this little drop right here. The chart's too close. So that was a nice little play right there. As you can see, I had the 393 puts, and they were right at the money, in the money slightly. Because I had 393 and it was chopping right around this 392.80 area. Then I finally dropped to the 200 EMA. So you gotta watch these EMAs. They like to respect them quite a bit, so that's why I watched them. Then I ended up grabbing puts again for a loss. I grabbed them at 309. 309 right here. 309 right in here. This candle's where I grabbed it, thinking for a double top right here. And I remember this very well because when I got the 392 puts on SPY, I was debating Facebook calls or SPY puts. Now I was thinking at the end of the day dump, and they've been dumping every day at the end of the day. It was kind of too obvious that they were doing it so much the last couple of weeks that it's Friday, put the call ratio is high, it's going to squeeze, and I should have just known that. I should have grabbed it. That was a huge mistake on my part, but it is what it is. You make mistakes. I just, for some reason, I had it in my mind that it was going to dump end of day, and it didn't. It ended up squeezing, so that was my second loss of the day and third loss for the week. But I was really looking at what time I got at 309. Yeah, right here, I was looking at this, and I saw this. I was like, okay, at this point in time, if I remember correctly, I was looking at 280 calls on Facebook, and they were at 56 cents when I was looking, because I actually looked at them, and I was very, very, my first instinct was to buy them because they were only 20 cents outside of the money. And when you get end of the day pops or end of the day drops, sort of like slightly near at the money, in this case Facebook was 20 cents out, the smallest drop or pop is going to send them in to 100%, 200%, no problem. So I saw that, I was like, okay, my first instinct was to grab it. Then I was like, no, it's gonna drop end of the day, and I ended up grabbing SPY instead. But if I ended up grabbing Facebook, they did go from 56 cents to I believe $2 in this push right here, and I was very annoyed that I took SPY over Facebook. My first instinct was right, and I went against it, and I shouldn't have. So that was probably my biggest mistake of the week. Was taking SPY over Facebook. I should have known that based on the put to call ratio, everybody was on the put side. It was going to squeeze end of day, and that's exactly what happened. And it is what it is. I mean, I still 3 losses for the week. I mean, that's it. That's extremely well, considering that most people can't even get 60% of their trades were right, and I got 88% of them this past week. And I was also looking at the put to call ratio for Monday, and I was thinking how it's still very high considering how SPY ended up squeezing. I mean, SPY squeezed so hard end of day right here that I would think that this big squeeze right here would have at least made the put to call ratio drop so that it's not so many people on the put side, but still a lot of people on the put side over the weekend. So I would not be surprised to see a big gap up on Monday. So Monday will be very, very tricky, and also Monday's next week is a 4-day week. I'm already talking about next week when in the recap, but I just wanted to bring up the put to call ratio. Even though it squeezed hard on Friday, it's still very, very, very high. So it'll be interesting next week. Hopefully, the weekly recap has helped you understand why I took what I took and do what I do and did what I did. Made a couple mistakes here and there, but overall was a fantastic week, and hopefully next week, being a short week, will be another great week. And be sure to like the video and subscribe, and thanks for watching.